Okay. Good afternoon, everybody. Good morning. Uh, I'm happy to be here, and I want to thank you for joining us today. What we're going to do now is we're going to try to trade the New York session, and this is the basic setup that I use every day in trading. You would see that the screen is divided into three portions. One, which we call the radar screen. And it's a very important tool that I use, and I'm going to share with you how we use it. And then the intraday chart and the daily chart. The first thing we do, and this is very important that you guys have to learn to do that because this is an integral part of trading, is that you have to choose every morning what instruments you're going to trade. Being focused on one currency pair or two currency pairs does not makes trading much more difficult, and it doesn't allow for success in trading. The reason is you will not get that currency moving and giving you big moves the same day every day. So today you might get the euro dollar like last week moving, making a few 800 pips like what we had in the euro yen last week. And some days it will go like yesterday, doing absolutely nothing. So the most important thing to do is first thing in the morning, the moment you get into in front of your screen, is to do what we call the portfolio selection. And the portfolio selection is done like this. You begin to look at your currencies, and for example, in our case, we have the radar screen. It reads the market for us. I can see what's happening. This is breaking. For example, the pound CAD is breaking to the upside. It's a strong reversal. So now I know I'm having some movement in the pound CAD. And I can see what other pairs has been. So you want to look at the previous session like this. You want to look at the chart like this. And for example, these two blue lines, the two sienna lines that I have here where I have the mouse, these represent the London session, the opening of the London session, the beginning of the London session. And you can see that the market has broken to the upside. So now we are basically long the euro yen. Long the euro yen, that's the move. And of course, since that's the break, I can also see that from the beginning of yesterday, the euro yen has been moving all the way up through the three prior sessions. So this means that there is some follow through into the euro yen to the upside, and my bias would be to go long the euro yen because this is how it's been moving in the prior session. So now I can plan myself to be trading in the long side. There is no reason for me to counter trend the market. And if you can see, this is the New York London session. And of course, that is the move. It has been moving up. And towards the end of the session, coming here right now, I mean, we can see now that this is 11 o'clock London time. So this means it's beginning later in the session. It's beginning to roll over and come down. So this tells us that the euro has been weakening towards the end of the session, and it is having a reversal. So coming into the New York session, I would be looking now at taking a counter trend in the euro rather than going long the euro. I would be looking right now to be short the euro. This exact setup that we did this morning, and I'm going to show you the trades that we did this morning in the room here while we're trading. This is the account orders, and this is exactly what we did. And you can see that following the same procedure that I shared with you, this is the New York London session. As soon as it got out of the range and it began to move, knowing that the prior move was to the upside. We took a long right there. We bought it at 120.97. This is a live account, the live trade. We bought it at 120.97, and we stayed with the trade as long as it's moving up. And towards the end of the session, when the market began to roll over, we sold it at 121.65. We made about 65 pips or 70 pips on that trade. Now, so what you need to be doing is to look at what happened in the previous session, and now prepare yourself to decide what are you going to do in this session. So we have seen that the euro has been turning to the downside. Now we are going to try to choose something to trade, and we use the radar screen. Well, this is one of the important tools that we use here is the radar screen. And let me explain to you how we use that. And I'm not giving you a sales pitch here. I'm just telling you exactly how we do things. And the way we do things is that every Sunday we prepare what we call the long points. No, we look for the long points and the short points, and we put them in the radar screen. So if it gets above a long point, you would see that the price turns into green. Harley, I will answer all the questions. I want to catch a couple of trades because I promised the people I will be trading live. So I will be answering all the questions. The last 15 minutes, I will open it to questions. And so just let me pick up a couple of trades and try to put a couple of trades because, you know, if you don't pick them in a timely fashion. So if it's above a long point, then it turns green. So this means that I want to be a buyer of the dollar yen. And if it's below a selling point, this means I want to be short. And I look at what we call the retracements over here. This is nothing to do with the Fibonacci and stuff like that. We do not use Fibonacci. We do not use any technical indicators. We just trade the price action. And I want to see the one, if it's red, the one with the smallest percentage. For example, here, the Euro Swiss is 9.1076%. You could see that. That means that this is the weakest of the euro. So out of the 4 euro pairs, the one with the smallest retracement of the low of the day, this is the weakest. So the Euro Swiss is the weakest. Then the Euro Aussie and the Euro Yen, and all of these are pretty much equal. So if I wanted to short something, my first choice would be the Euro Swiss, because it is the weakest of the 4. So when it bounces back up, I would be ready to short it. And the same thing if I wanted to buy, I want to buy something that is green, which means it is above, moving up with a small retracement. So the dollar CAD is actually strong. So if I wanted to buy something, even that you see that the dollar CAD is coming down on the daily chart, that is the move. Euro Yen. It is coming now. If you see this dashed line, this here I want to be short. I want to take this to the short side, but I need to time myself into the trade. As you can see, we have this one of our dashed lines, and these dashed lines indicate that was a prior. If you look, I'm going to show you. It is a prior momentum high, or a prior, if you want to call it for simplistic reason, it was like a prior resistance, which is around the 119. So this means that the price is going to come to this price point and pause. And I am ready to take a short. I'm definitely going to take a short if it trades below the this price point over here. This is a normal bounce, and I want to let it go up because usually when it comes to a point like this, we expect to get this bounce. So I'm trying to time myself into the trade. I am not looking to be a buyer. I am looking only to be a seller of the euro or the euro pairs. And if I go back to my radar screen, you would see that these are all my euro pairs. And it's already, the euro is selling off. It's 62 pips below in the euro dollar. The euro yen is 71 pips. And the euro Aussie is 35, 37 pips. So the euro is weak across the board. If you look at the daily chart on the euro dollar, it had a big move in the overnight as a reaction of the news that came out of the ECB that they are coming up with about $1 trillion of support, if you will, or intervention, and trying to have liquidity for the European nations. But the market here is telling us that they do not see this as positive news. So if the market does not see this as positive news, we want to be sellers of the euro. We're not going to evaluate if this is good or not good. So this here is my market side. This is what we call the market side. And so that is what tells me if they are selling the euro or they are, it's supposed to be good for the euro, Abel, but this is what the market is voting. I mean, again, my opinion, and I want you, this is a very good point that you brought up, Abel. If something is supposed to be good for the market, and we, as logical human beings, understand that it is good for the market, and we expect that the price of this instrument or the price of the euro to go up, this is, as logical human beings, we can expect that that would be the normal reaction to the market. But our opinion, yours and mine, and everybody else in the market, is as strong as the amount of money that we can have in our pockets. So if I have $1,000 in my pocket, this is the value of my opinion. If I have $1 million in my account, that's the value of my opinion. You and I, we could be right on the market, and each of us have $1,000 in his account, and we're trading, going long with 1,000. Somebody else might be wrong, who doesn't know what to do. He has no idea, but he has $1 million in his account. And by virtue of his size, he can make our correct opinion end up in being a losing trade just by virtue of his buying power. And therefore, it is imperative that we do not vote our opinion in the market. Rather, we let the market tell us which way it wants to go. And that's the truth. We're not coming into the market to prove we are right and somebody else is wrong. We're coming into the market to make money. So whichever the wind is blowing, if it's going up, then we're going to take the trade. Exactly. Absolutely, Fenton. The one with the largest amount of money is the one that owns. That's a very nice line. Thank you. I like that. So, having said that, now we still, as long as it's still below the market side, I still want to be a seller. So I'm just going to give it a few more seconds here so it can set up around the market side so I can gauge it. And if you look at the radar screen here, you can see that the euro dollar came off the low about 50%. The euro Swiss came back. It's only 3 ticks or 4 ticks below the range. So we're having quite a decent bounce in the euro, but still it is not I just want to see, I mean, usually the market side acts as a short-term resistance or a short-term support. So I just want to see if it actually, if they're able to take it through the market side or not. This is not a moving average. It has nothing to do with a moving average. This is actually counting the trades that are going on the bid and going on the ask with this broker. And we can identify the size that's being traded on the long side or based on the bid or the ask. So we can the pound dollar came back inside, came back all the way. Okay, so let's look at our auto here. This is the euro yen. This is the pound yen. This is the Aussie yen. So I think I can take now, it is trading at 120.24. I just want to let it push up a little bit here and before I take it to the short side, the Aussie yen. See the euro dollar here. This way I can look at 6 or 7 markets and I can make a trading decision and I can gauge the correlation, which is stronger. So again, just to give you like a brief description, if you look at the bottom right hand side here, this is what we were, as I said, we were trading this morning. We did the same process and we took this morning 83 pips on the trades that had in room. Okay. The lowest time frame I trade nothing less than the 200 ticks, Harley. Anything less than this is not for you or me. I might veer a little bit off topic here, but I think it's important for me to share with you this information. What happened last week, what you have seen last week, has to be a lesson to all of us, including myself, on how to approach the market. Okay? The market today, guys, with the amount of technology that's available, with the computer programming, and if you look at this here, this is now these trading today has to be, we have to approach the market in a completely different way. No, it's not a moving average or a tick average. We have zero technical indicators, Jack. Zero. Nothing. So, this is actually what it does is what I told you. It counts the trades, the number of trades that this is exactly, I'll show you what it does. You see these green ones? These are the ones that go on the ask. No, it's not. Hold on a second, Osama, I'll come to it. And the ones that are red are the ones that are sold. They are hitting the bid. And we're trying to find if the majority, see the majority here is red. This means that the majority is being sold. All the orders that are coming in are being sold. So that's what the market size is made of. Osama, to answer your question, is it really a mistake? The simple answer is yes and no. What does that mean? It might have been a mistake as far as one of the stocks. If you're trading something with the New York Stock Exchange and you got a trade and somebody put what they call the fat finger and would have created this big order. That is a very small part. This is a distraction. The people that tell you this, they are distracting you from the reality. As you have seen on Thursday, this was market-wide. This was not just the New York Stock Exchange. This was not just the S&P. This was not just the DAX. This was every single market that was traded that day capitulate. So you can have a mistake in one market, but you cannot have a mistake in 1,000 markets. No, that's not the electronic failure either, Harley. What happened, and that's my belief it is, and that's why I have been preaching the price behavior and trading without indicators. Hold on a second, Harley. Without the indicator, but basically looking at the price action. The reason is every single computer program out there, every single robot out there, every system that gives a technical signal to take a long or a short, or every technical indicator out there across the whole market, guys, is based upon the last tick or the last traded price. So if you have a computer, an indicator, and you feed that indicator that the last price is 100, it is going to generate a specific signal. If I come back and feed the same computer or the same computer software that the last price was 50, which is less, even that was a mistake, and now instead of 100 I just put it as 1. So I made the mistake by not entering the last 2 zeros. What's going to happen is now that piece of information that we feed the computer into that system is going to generate a sequence of events, will generate certain orders based upon the last entry or the last price that was entered into that computer or that indicator. And that would generate a signal, a sell signal. And one sell signal is going to push the market down. If I have a sell signal, exactly, it creates a domino effect, all based upon errors. So, and what happens is that people now are sitting looking at a computer program, looking at an indicator that's giving them a so-called divergence, or it's giving them so-called blah, 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 and they're, at the end of the day, they are not taking action to either overcome what's happening into their accounts or actually taking a counter trend move into the direction of the trade. So let's hold this. So it is important, I will tell you that thing. So it is important that you guys must be comfortable with trading based upon the price action that you see, and forget what if you have an indicator, or forget that this market is going, oh, I have my moving average going up. I'm not saying that. I'm talking about you and myself. I'm not talking about anybody. I'm talking about you and myself. You need to, if this thing is going up, you want to be a buyer. If this thing is coming down, you want to be a seller. Everybody, we were trading on Thursday in the live trading room, okay? And you can, most of the guys that are with us in that room on Thursday, on the day the Aussie yen and the Euro yen was crashing, most of the guys at least caught, that are with us in the room when we were trading on Thursday, at least a minimum of them caught at least a minimum 200 pips on every single trade. Why? Because it does not, once they see that the prices is coming down, we stop analyzing and we begin to take action. And that's what you guys and we all have to do. So I'm trying to get a trade in the pound Swiss or the pound CAD, whichever gives me a trade. Okay, the pound Swiss. It's not what do I like. Hold on a second. Let me see if I can take a trade. I don't know what's wrong with TradeStation. It's giving me the price. All the thing is grayed out. It's not what I like or not like, Boyki. What you want, the answer to your question is, the answer to your question is what happened on Thursday. Trying to get a fill. Okay, I'll do something which I don't like to usually do. I'll take a market order. Okay, I took a market order to get filled in it. Looking to go long. That's the dollar Swiss. Just hold on. I want you to watch my equity first before we go long or short. Let me see the. You see, for example, from yesterday, our buying point is 101. You see, look at the daily chart. This is my buying point, the 101. We did this yesterday on Sunday. So as soon as I put my chart and it's above this, that to me, that's it. It's a no-brainer. It's a buy. I will go in and try to buy it. If they can give me a fill sometime this century.
Order filled.
So I took the dollar Swiss. Let's see what else. The pound Swiss, the dollar Swiss. Let's see what else we have. I can take the pound CAD. Okay.
Order filled.
Okay, so this is how we manage our trades. So I'm going to come here. I mean, again, keep in mind we're a little bit late in the session right now, but usually this is the Euro Yen.
Order filled.
Okay, so I'm going to stay with the Euro Yen. I'm going to put the pound CAD. And this one, I don't have the pound yen, so pound Swiss. What? I'm confused. Did you go long or short? No, I didn't take the dollar Swiss. Yeah, I'm long the dollar Swiss. I'm long the dollar Swiss. Okay. So just let's wait until they start moving up. Okay, so these are the 4 positions I have. I'm short the Euro Yen. I am long the pound Swiss. I am long the dollar Swiss. And I'm long the pound CAD. It's a little bit, I came into the trades a little bit late. So I might get caught in the pullbacks, but I'm taking the trades so that you can see that we take the trades. Hopefully they will begin to move up a little bit. So anyway, while we're watching the trades, Yes, you can take the pound dollar if you want. I mean, I'm long the pound CAD and long the pound Swiss. So yes, you can take the pound dollar if you want to. I mean, again, basically we're long the pound, Jack. So the idea, what I was telling you guys is, you need to be focused on the price action. As you look at the screens in front of me, I took my trades, no moving average, no indicators, nothing. This thing is moving up. I looked at the prior session in the pound Swiss. It is pushing higher, and I'm going to, on my stop, I know the market side is my stop. This is my stop over here. This is my stop. This is my stop. So I have exactly where my stop is, and I'm not going to let any position get away from me. And so, as I was saying, my stops are the market side, guys. My stops are the market side. Always the market side is my stop. This is what we do every morning. This is what we do every morning while we're trading in the room here with everybody in our trading floor. We take our trades. Why is this? It seems to be like a bad tick. So the euro yen is kind of staggering and it's holding up a little bit. This is the euro yen. This is the trade. We took it here. You see -1. This is the short over here. I'm just turning off these indicators. Okay. So the pound CAD is still holding and it's pushing up. Oh, absolutely. You have to. Absolutely. But in this case, I'm just doing minis. So it's not, I mean, there isn't much I can adjust with this position. Yes, there is a definite relationship between commodities and stocks. But all these relationships, for example, one of the major, like yesterday when every Sunday we do the Sunday session and we do our trade planning session for the following week. So yesterday we were doing the trade planning session for this week, and we were discussing the relationships and the correlation. One of the major relationships and correlations is the relationship between gold and the US dollar. So whenever gold is going up, you'd see that the US dollar is coming down. And whenever the gold is going up, you would see that the Canadian dollar is going up, and you would see that the Australian dollar is also going up. So the pound CAD is coming back below here. If you look at yesterday, let me open the position trading. That's what we do, our position trades. You would see, for example, that there is a positive correlation between the dollar, a negative correlation between the dollar and gold. There is a positive correlation between the Canadian dollar, gold, and the Australian dollar. So if I put for you the Australian dollar, you'd see that it crashed 2 or 3 days ago, while gold has been moving up. So these correlations are good and they do work, but you have to make sure that at the moment when you're planning to take the trade, that these correlations are working in your favor. If the correlations is working in the opposite direction, do not say that this is the positive correlation and I have to stick with the correlation. You can get out of the position that's not correlated and reverse and take it to the. So with the stocks and commodities and what's been happening in the last few days, all the correlations, Rez, has been thrown out of the window, because what was happening in the market was the what is called the long liquidation. So I have to get out of the euro yen. Let me see the euro yen here. Still no, it's okay, not a problem. The pound CAD is 33% from the high, not a big deal. Pound Swiss. You see, I'm using the radar screen just to make my decisions on the trade. The pound Swiss is 28%. It's already been 73 pips, so it's not bad. The dollar Swiss the dollar Swiss, that came a little bit too much. I don't like the dollar Swiss coming back so much. You see now they're coming to the market side. No, I'm not in the pound yen. So if the dollar, you see, it comes to the market side and it holds. If it trades below the market side, then I'm going to get out of it. And you can see here that the dollar Swiss is now beyond 60%. I'm just going to give it a few more minutes. And this is my stop. So that was my entry right here. So anyway, what I was telling you about the correlations, Rez, is that if it's noisy for you, I mean, you don't have to trade like me, Boyki. I mean, everybody has his own cup of tea. You do what is good for you. I'm not telling you to trade the 200 ticks. This is what I trade. You can trade with it or trade something different. Whatever, at the end of the day, what's important is for you to make money. And however you make that money, all the power to you. No. We don't use, it's like, time-wise, you're looking at probably a 15 to a 20-minute time chart. Okay? So I'm going to close the euro yen.
Order
Coming
failed.
back too much, I do not like that. And the reason I'm closing it is that there is already the weakness in the guys. Boyki, I just want to tell you something, all of you. The most important, the reason you're here in FX Street, the reason you are watching those videos, the reason you're watching those webinars is for you to make money and to become successful. You do not have to do like everybody else does. What you have to do is to find something that works for you. I'm sharing with you a point of view. Somebody else shares another point of view. And based on that, you take whatever you like from any presentation that is being shared with you, put it together and create something that is good for you that you can understand, you can control, and you can make money off of. Okay? So there is no, when I take a trade like this and it's down 20 pips or 29, I'm not doing that to impress you or to, no, I'm trying to show you that, to impress upon you that I follow a certain set of rules. This morning in the London session, we did 150 pips or 83 pips on the way up. Right now, we're a little bit on the downside. We'll take it again. So that's the whole idea. And you make your own trade. The reason I closed the euro yen, I don't know, access here is I want you to look at my radar screen. You see that the dollar yen, it came back over 60% of the move, retraced back 60%, and it's getting into a buy. You see that the pound yen is also coming back inside the range. So you see that, you see it's inside the two yellow lines. So this, look at this. And the only way I saw that is because the radar screen. So this means that the yen is strengthening. So I don't need to fight it. I get out. This is just only 2 pips right there. You see, this exactly translates to me what I see on the chart. I'm just trying to take a couple of trades, but nothing seems to be working. They're all, we're getting a bounce back. So I'm just going to give the pound CAD should have been moving nicely. This. Everything here is, if you look at the radar screen there, everything is beyond the 60%. So that's quite big moves. So the pound CAD is coming back. This is too much. This is beyond my accepted risk. The pound is giving it all back again.
Order filled.
So immediately you take, if it gets beyond the, right here it came back 50% of the high. So it gave back 50 pips of the high. This is too much. It's still not a sell signal because my buy signal is the 165.19 and it's still above the market side, but there is no reason for me to fight the tape. I'm just going to give it a couple of more ticks. Everything is already came back. Just there's nothing that's moving in the. So let's see the dollar Swiss. Not particularly. Again, this was the buy signal here, the 101, and that is the market side. So I'm just gonna see if it gets a little bit back above the market side. And all the Swiss, if you look at the Euro Swiss, if you look at the Aussie Swiss, you look at the Swiss yen, you see that the Swiss is weakening. So that's why I'm allowing this a little bit of room. Otherwise, let's see what the pound Swiss is doing. It's still a bit less than 50%. No, I don't use target. The pound dollar. No, the pound dollar is not a sell right now. Was it Alex? No, that's not a sell. Look at the chart. At least in my opinion, that's not a sell. It will be a sell if it trades below the 150. But as of now, this is nothing more than a pullback. And if I'm leaving some money on the table, Alex, then that's what I'm leaving. I'm leaving some money on the table. Not every push to the downside, Alex, is a sell. Not every move to the downside is a sell. I will share something with you for, I guess you're in England, you're in the UK, Alex? Okay. Are you in the UK? No, it's not a reversal, Alex. take a look at this. This number here, this line here, the number is 148.32. See that number? This is, before I take you back, I'm going to tell you why it is not a sell. This number, the 148.32, has been the breakout point of 2002, has been the breakout point of 2000, and it has been the low of 1993 when George Soros made the biggest trade of the century, and he was able to make $10 billion on the trade. So the 148.32 is one of the most powerful, I'm going to close this one here, one of the most powerful points of reference on the British pound. And if the price trades above 148.32 after this bounce back up, I have no reason. This means what to me? Let me show you this first and tell you what it means. Let me put a new chart for you, a clean chart so you can see it. So I'm going to put for you the 148. I'm just going to put a line here, the 148.32. First of all, it was the breakout of 2009. It is, like I said, it is the breakout of 2002. It was the high, the significant point of 2001. It is the structure point of 2000. And as I was telling you, it is the low of 1993 when the George Soros trade, and it held around the 148.32 for the span from 1993 till the beginning of 1994. And I want you to count with me, Alex, how many times it went above 148.32 to give us all a couple of hundred pips or 1,000 pips. Look, from 148 all the way up to 160. The next time, 148 to 170. From 148 to 210. From 148.32 to 170. Okay? That is what price behavior is all about. That is what the market is voting for you and I, Alex, that this is what it wants to do. Now, these numbers, all the traders, you can rest assured that everybody in the Bank of England knows the 148.32. They have the records, they have the computers. And if you do it on a daily chart, it is much more than that. This is a weekly chart. Okay? So this is such a significant point and powerful point. And now today, this week, Alex, it came below the 148.32 yesterday. It made a low of 144.70. And now it is trading at 148.32 above it. So selling it now is no longer an option, because this means one of two things. That probably the Bank of England will be coming in to try to support the pound. So I'm not going to fight them by saying to take it to the short side. The speculators cannot push the market in any direction, Harry. The speculators, the people try to blame speculators, that speculators are pushing the market down and they are betting against Greece. The ones that say that, if you wanted to make few pips, Alex, if you were with us yesterday in the Sunday session, here I'll show you. This is how money is made. It is not, take a look here, just 1 second. Look here, Alex. This is the British pound. We are buying the British pound. Oh, this is the wrong. Our buy signal from the British pound yesterday was a trade above 148.32. So in this morning, here is the 148.32, Alex. So coming into this morning, when you wake up today, coming into the market, look at the 148.50 right there. I know I'm trying to share with you something that you can use it to make money, Alex. So from now on going forward, whenever the price is down below 148 and it comes back above 148, you want to buy it. This is how you can be guaranteed that you can make a few pips on the trade. So you took it at 148.60 even here this morning. This is not yesterday. This was this morning. And it took you from 148 to 150.50. You made 200 pips on that trade just in the London session this morning. So right now, this here is a pullback, and you should be looking for, until you get a structural failure or something that says, I am changing the trend, I'm still looking here now for a buying opportunity to be able to take it to the upside. Okay. If it comes below the other side, then I'm going to consider selling it. So going back to speculators, guys. Yes, definitely the Portugal and Spain and Italy, they are the ones that are coming next. They are the one they are next in with the problem. You can come in every Sunday, Alex. You can go to the website every Sunday at SpyGlass Trading, and it's we do it for peanuts, like 15 pounds, not a big deal. So just go to our website, SpyGlass Trading, and you just click it's called the trade planning session. We do it every Sunday, and it's recorded for the week. You can use these numbers to trade through them all week. And I'm putting the name for you, and then I'll put the this is the website goes there, and you can all right. So right now it is beginning to give us a sell signal. Right now, so this is my first sell signal. This is what we do every Sunday, Raz. I mean, all what you have to do, we do that every Sunday. Again, I'm trying to trade with you here. Just click on this link that I put up there, and you can see the recordings of all the trades that we do and how we plan. You have to plan your trades every day. So we do our trade planning once a week. And once we do our trade planning, we know exactly which way, what are the significant points. Every pair we have here, we identify a long point, a short point, a structural long, and a significant long. And we give them all to you, okay? And you can copy them and use them for the following week. And then the next week we do the same thing over again and over again. So just go to the website. Well, exactly, it went above the one exactly. Who's this? Okay, so that's why I took it above the. I'm using a different computer boy radio star. So, but this is the. That is the 10102. That's why we took it to the upside. When it came above it, right there, this is where I took the trade, and it's still sitting above the market side, so I'm not getting out of it. And we'll see what happens. So, okay, when do you set up your daily trade plan? Okay, so initially we do the Sunday trade planning session, and let me have J9. We go on to we spend 2 hours and we do about, 10 pairs. I'll show you what for example, we do 10 pairs, the ones that are most active, and we analyze them. We pinpoint where do we want to go long, where do we want to go short, what is the trend changing point, and after we're done with the planning, we record them, and after we record them, we upload them on the website. So you guys, if you want, you can go to the website and you can see, for example, all of last week's, the ones that we did last week, and you can take a look. Yeah, no, not GMT, London time. So it's 1 hour less than GMT. So it's 1 hour more. I don't know, London time. I don't want to confuse you. It's London time, not GMT. Okay. And 1 hour more. Okay, I'm adjusted. And we plan our trades, and then the next day in the trading room when we're trading together, we are using these price points as our reference where to buy and where to sell. And you can see it's sitting. This is the 101.20. It is sitting right at it right now. It happens to be the market size, so we're just going to give it some more time. I mean, this is how we, either I can give you this information in the Sunday session, or if you attend the course, I mean, this is how we teach all our traders how to identify these significant points. I mean, this is much bigger topic than it is for a webinar, but these are this is the price behavior techniques that we use. We teach them in the course. You can have the course online, or you can come here in London if you're in the UK to attend it. And once you take the course, you can take it forever. So anyway, I don't want to do a sales pitch. If you have any questions, send an email to the guys in the office here. They'll be more than happy to answer these questions. But again, it's something that we take. Just send them and they will tell you guys. The market side, this is the computer calculates this, Osama. The market calculates this, and it's not, every session is different. I mean, it is not connected. You see, it ends here and it starts here. It is not connected. That's why it is not a moving average. It has nothing, it ends here and it begins. So it is actually counting the trade, guys. And it's telling us which way it goes. For the pound dollar, if it is retracing 98%, what does that mean? If it's coming back 98% in the pound dollar, now it's here, now it's trading at the pound dollar. This means if you see here, there is nothing, it's zero. This means it is retraced over 100% of the time, and it's back inside between the two lines in the neutral zone. So Osama, you cannot program it. I mean, it took us ages. If you want to reinvent the wheel, reinvent the wheel. It would be much cheaper for you if you bought it. You didn't buy. What did you buy? I don't even know you. So anyway, as I was telling you guys, this retracement, somebody was saying we want to short. As you see now, it is coming back inside the range. That's why I did not elect to go short the pound, because this now is more of a pullback. This is here. You see, this is a pullback, and this is a pullback. It has not yet failed to. Yes, I'm in London, Eres. It did not yet failed or gave me a trend change, so I can decide to go short. My short now for the pound, guys, is right there. This will be the short for the pound dollar. If it trades below 149.90, then I'm going to go short. The euro yen, let's see the euro yen. The euro yen is still a short. I mean, it's still a short. It's still, as you see, it's 66% off the low. So that's what happened. That's why I closed it, because on the other side of the market side. But it's still, until it gets to the other side, I might take a look at the other yen pairs. So the dollar yen came back 85%. The pound yen came back 92%. The Aussie yen came back 80%. The euro yen came back 72%. So this means what? This means that all the yen pairs yeah, close the transfers here. Yes. Okay, I'm going to tell you. Yeah, so, what? I don't know what you. Yeah, they will give you. They will. I'll have somebody from the office give you the address and phone number. So right now, you can see that all the yen pairs, the dollar yen is now 100% retraced. So this means, and the pound yen is 100% retraced. The Aussie yen, where is the Aussie yen? Is 91%. So this means that the dollar yen and the pound yen is getting to be a buyers. I did not short the pound dollar yet. I did not short the pound dollar. I said I'm not going to short the pound dollar discipline. I said I'm not going to short it because it is above the 148. It's still inside the range. I'm not going to short it. Okay, and if it comes below the 149.90 right here, this is what I'm going to short it. But it's not yet. But now the pound yen, the dollar yen is getting to be a buy. You see the dollar yen is coming back inside the range, so now that's a buy. If you wanted to take that, I can take that buy. See the pound yen. Look on the daily chart. The buying point was 139.70. Look, this is a very nice, this is a pretty chart, guys. You see the market side here, 139.74. The buying point from yesterday is the 139.70. And right now, so this is a good buying opportunity. We can look at buying it, and you place your stop below the 139. So your risk on this trade is 98 to 74. You're risking about 24 pips on that trade. And that's why I did not take the short. Let's try to take that. I took the pound yen because now it is reversing, and I will see how far it goes. And my stop is right below the and this is how clear and how decisive one should be making his trading decision. It is not if it doesn't follow through based on the rules, then I will take the information and reverse and take it into the opposite direction. Okay? The retracement is nothing more than the actual physical retracement of the price movement of the current session. So it is nothing to do with Fibonacci. It's actually how many pips. So if you so you can consider this as these yellow lines, and these are done by the software. It identifies for us the meat of the market, where the market is setting up for the beginning of the session, and we can identify, we use this to give us a direction which way the guys, if you have specific questions about the software, I mean, again, this is I would love to give you a sales pitch, but this is not the intent of doing the FX Street. Anyway, there's a couple of announcements I want to make on FX Street here today for you guys. And one, I have been invited by FX Street to come to go to the ITC in November. And I think they have about 75 guests. If you can register to come to the so if you come We will be, whoever signs up with this, just let me know, and I will be sending you some material so that you'll be part of the team that I will be training, because each of these the experts that will be going there will be taking a group of guys to train and to try to trade with you. So if you are willing or you intend to be in the ITC in October with FX Street, send me information, and we can put you in part of the team that I'm going to train. The other thing, we're also doing it with FX Street. We're starting a blog. Hopefully, God willing, it will be up tomorrow. I'm a little bit dyslexic when it comes to computers and blogs and stuff like that, so I'm teaching myself how that stuff. So hopefully it will be up tomorrow. I would like you to attend, and if you have any questions in the blog, if you have anything you want to ask or something like that, please let me know, and we'll be happy to every email or every comment that you guys are going to, I'll be happy to answer. Of course, 0%, Boyki. Everything 0%. I think you contact FX Street, guys, and we will be there. I will be bringing one guy with me, one of my traders here, and we will be trying to train as many people as you, whoever is interested in learning the method of price behavior. We'll be happy to share with you as much as we can. And the blog is going to be on FX Street Able tomorrow. Hopefully, as I said, we should be launching it tomorrow, I hope. And just trying to get clear of some of the technical stuff. And you got 80%, so you got 100,000. Okay, Osama. Yeah, I'm from Egypt. Originally, I'm born in Egypt. Where are you from, Osama? I'm Egyptian, like they say Egyptian. Lebanon. Hello. Okay. If this baby comes below the market side, I'm going to get out of it again. All right, guys. How long do we have? Anybody has any questions? We got about 5 minutes, I would presume. So 15 minutes. Okay. So let's open it for questions and answers. If anybody has any, you want to see the lines without computations? What do you mean by that? I'm not asking for anything. When you see the lines, I don't know what your question is without computations. If you want to see them without the lines, yeah, I can show you. I mean, if that's what you mean, that's what you're talking about? No, I do not use pivot points. I do not use Fibonacci. I do not use that stuff.
Order filled.
I don't use any. No. SAR, my friend, never ever. I'm going to give you one piece of advice, Wixo. The worst system that you can ever use in your life is the SAR. Never ever use that. Okay? Of course, we look on commodities. We look at, as you see here in the what we call the position res. In the position here, we trade. These are all the stuff that we trade. We look at the indexes for the currencies because we want to know the general direction of the currency index. So these are not. This is the Australian index. This is the yen index. This is the pound index. Then we look at gold. We look at all the commodities. Look at this. This is all the stuff that everything that you see here, we correlate these relations, and these are our positions. Okay? Now, guys, why don't you want to believe me? We never use indicators. You know why everybody gets lost his shirt last week? Because they're using indicators. And I can bet you that anybody. That's why everybody's sitting on TV wailing and screaming and yawning. Oh, it's a mistake. It's a bad finger. It's a blah, blah, blah. It takes the last price. Your order, Osama, listen to what I'm saying. Your order to buy or to sell is based on the last price that is triggered. So if you have a bad price, it's going to create a bad order. And once that bad order comes into the market, it is going to create a domino effect. And this is what happened in the market on Thursday. That's why a company like Accenture came down to be worth 1 cent. Procter & Gamble lost $50 or $40 of its value. This is because this chain reaction of having one bad order after another. But most of the traders that are watching the tape and looking at the chart and they saw, let me show you on Thursday, for example, the dollar yen and the pound yen on Thursday, and I want you to see, just looking at these indicators, how much money you would have made. It's coming down. That's why we got out. This is last Thursday, guys. Look at this. This is last Thursday. All right. It came below the 141.40. That is your initial trade. You want to take it short. You will take, look here. Okay, I'll show you the trade of last Thursday. Hold on a second. I want to show you the trade. What do you mean there's no sound? I don't want you to trade anything less than 15 minutes, Patrick, because anything less than that is not, it is more for institutions and stuff like that. You do not want to be trading it. Look here. These are all the trades. Show you the trade on Thursday, last Thursday. This is last Thursday's trade. This is here on the 5th of May. Look at this. The first short was from here. The first short, 141.49. See that? And it, every blue line like this is a winning trade. This is a winning trade. So the first trade, you took it at 149.50, 141.40, and we closed the trade at 140.60. You got 150 pips on that trade. Then the market bounced off. That's why we didn't take the trade. As soon as it came back down again, that was the second short again at 149, 140.96. And you stayed into the trade, you covered it again. Moving again, you go short again. This is how we traded on Thursday. Look at this. These are, every blue line is a winning trade. This trade, you took it short at 140.50. You covered the trade at 139.25. That's 200 pips on that trade. If you can program this, Osama, that'd be good. Okay. And then you took it again. Well, in the consolidation, the software, we have it planned like this. We have those different setups, Patrick. So if I'm in a consolidation, let's say I'm not going to take the buy. I'm turning the buys on. This is how we set up our software. So in the consolidation, we decide, okay, the losing trade is red, Boyke. To contact me is here. This is the phone number. James is supposed to be putting the contact numbers for you. This is the phone number here. This is the phone number here, guys. Personally, this is my email, Mike B at SpyGlass trading.co.uk. And all of you guys, if you need anything, this is my email address. Of course, I have losing trades. Do you think today I had 3 losing trades, and now I'm staying with the dollar Swiss, and now it is turning positive, so I'm staying with it. And this, of course, we have losing trades, Boyki. There is no holy grail. There is no, if anybody tells you that he has a winning trade, then, but this is the trades on Thursday. Okay, guys. Vicky, thank you very much, all of you guys, and we'll see you in June. And tomorrow we're having the blog, hopefully on FX Street, the FX Street blog. Tomorrow we're starting it, God willing. And anybody that wants to sign up to the ITC, FX Street ITC, please sign up with FX Street and send me your email so I can send you some material so that you can plan. We want to pick a team of traders that we're going to train in the convention at FX Street. Okay, guys? Thank you very much. God bless you all, and see you next month.